Europe stocks are lower and Italian bonds fell this morning after Italian Prime Minister Mario Monti announced his plans to resign. November trade data out of China was weaker than expected, which conflicts with other data that indicated a rebound was underway in China. I'm Lindsey Bell, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the morning call. Stocks held higher last week, but they really lacked momentum. We got a lot of headlines this weekend. Italian Prime Minister Mario Monti announced his resignation, which will be next year. China export data was weaker than expected, but their industrial production was good. And this week, going into this week, we got the FOMC meeting on Tuesday and Wednesday. I mean, how is the market going to digest all of this?
Well, one good thing is that they won't just talk about the fiscal cliff. I think everyone in the market is so done with the fiscal cliff, and that you saw that last week, because last week, we weren't as headline driven when you had meetings and there was, a meeting for nothing, is the Boehner and the president meeting this and that. So the market got a little bit of a callous to that, but then we haven't really focused on Europe in a while. So this news out of Europe, definitely puts it back in focus. It'll put the debate how Spain is asking for funds. Will Italy need funds? And so there'll be some more uncertainty. But overall, I do think that the market's holding higher. Every time we've had some kind of corrective process since that new November 16th low, we've held higher. But it's been a very targeted, lethargic trade. And I think traders are trying to stay with it, but they're just trying to stay with it with a little less size, because it's not a real interesting area right here. Yeah,
it's been a tough environment. Exactly what does the chart look like here?
So what the chart looks like is a flag pennant type pattern. So if you go to the chart of the SPX, you will see this was that reversal we had on November 16th. If you recall, this was that June 4th low, and from there you had a really nice rally all the way up to that 1474 area, and then we went sideways, and this was choppy and erratic, and we broke that. We broke around 1440, good spot to switch gears from there, from 1440 all the way down to almost 1343. Then you had this nice reversal right around here. You had follow through. We held higher, then we continued all the way up to this minor reversal coming into 1423. But look what happened. We didn't fall apart. We didn't just all of a sudden start trading lower. We held higher above the moving averages. We did some nice work above this, just say 1400 area. So I would say now on a micro level, you have a point here around 1408. The longer we hold above 1408, I do think maybe the market finally gets some momentum for a move up to 1440 going into year end. But for right now, we're in this range, holding higher, and you just have to be very specific on your trading strategies.
We'll take a look at a bunch of different sectors in the sector spotlight and see how they fared last week. We'll start with the home builders. On Wednesday, we saw a pullback in the group, despite a report from Toll Brothers, which is a luxury builder, which was a good report, but their outlook for 2013 was a little tepid, so people didn't like that. The stock didn't really go anywhere that day. So this pullback in the home builders, it was a better group for the year. Do you think it's enough? Is this an opportunity to buy, or do we need to see more of a pullback?
I think it's one of those, it's a divergence that traders are trying to figure out. We were in the morning call, Toll Brothers, I remember they announced their results, and it was up. And I said, it'll be healthy for the group if it could hold up and go higher. But what happened? It failed on that day. Anytime a situation fails on good numbers, you have to always take notice, and that was right here. Okay, it wasn't at the highs, wasn't ready to go and continue. It was right here. You had a nice chart pattern, nice mid-range tight pattern that opened up, failed. That gave you an excuse to take some profits that it needs time. And then from there, you had another down day, and look where it is here. So I would say for Toll Brothers, the longer it stays below 3180, I would say the more negative it actually looks. And if you go to the overall group, like you mentioned, very strong group, but at this particular point, it's not showing signs of momentum. It's not actually I would say in trouble, because you do have a nice high-level channel here, but it doesn't look as if it's ready to break out. It broke above this, or broke below this this area, which would be a high-level stop for momentum players. So right now, I think you just you stay with it on small size, and then if it starts to trade below this minor area here, this is going to be major support, and this is where intermediate or macro guys have to take a closer look.
Last week, the financials got a nice lift, and that was partially due to the Citigroup announcement of their restructuring. The group overall, though, has been in a rally more recently. Is this a group that can continue to rally into year end, do you think?
I do think so. I think that each individual name is not created equal, as we saw last week. If you look overall at the XLF, you will see at this chart, it did break higher. It's above the moving averages, but it's not above recent resistance at all, but it's getting close. And then you look at a stock like Bank of America that we spoke about a lot, that had a really nice clean move. This was really nice and tight above all the moving averages. Talked about maybe being in a tier 1 and then breaking above 10, adding to it for cash flow, and look how it closed. So at this particular point, we go to the weekly chart of a stock like this, looks like it's just breaking out. So this weekly chart tells me it can continue, and I could see 12 to 14, maybe even first quarter of 2013.
What's interesting is the transports, the action that we've seen there. It looks a little more positive, which could be good for the Dow, which is, the transports usually lead the Dow. So what are you seeing in the chart?
I see a really nice tight pattern. I don't typically trade this group, and I'm going to look towards it, because if some of these high beta names or some of the names I usually trade continue to lose momentum, it's going to go somewhere. And if you look at this chart, I love channels, and I don't ask questions about it, because all I say is if it resolves in a direction, I typically try and go with it. And if you look here at the IYT, this is a long channel. This is over a year where this has done basically nothing. Okay, so at this particular point, it's holding up in the high end of this channel. So if this were to break above, just say 92, 93-ish, your next target here is above 96, and you can find some nice stocks within this group. So at this particular point, transports should be on your radar going into, year end or even the first quarter of next year, for it to really get going with some momentum, maybe above 92.50. You could see that, and for mutual funds and for guys who like slower pace situations, that could be a constructive signal.
The retail ETF, the XRT, has had a decent move this year too. It's up 21%. It's kind of stalled out though lately, which is kind of interesting given that we are in the holiday season, and usually it's the seasonally right time to own retailers. So what are you seeing in this group? Just
moving slower, and like you said, there's no momentum in the market. There's exciting spots at times, but they're far and few between. And if you go here to the XRT, you will see that there's a lot of relative strength. The chart doesn't lie, and the 200 days all the way down here, and look at all these moving averages it's above. It just can't break out above highs. But this trend has been in. This trend is strong. So I think people picking out individual names in this group are following these trends, and they're doing just fine. So at this point, until this accelerated trend changes, I would stay with it, and maybe with a bit more time, if the market wants to go, this is your breakout area, and that's above, I would say, about 65.47.
We're going to take a quick commercial break, and right after this, we'll get back into it with some specific tech stocks.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into the trenches with the trader's favorite tech group. We'll start with Apple. I mean, it was a rough week for this stock. It was quite a roller coaster. Dare I say, though, at the end of the week, it looks like this chart might be a little bit broken.
The chart, what you have to do is you have to look at time frames.
Okay.
And, it hit 700, and when it came down from 700 to 505, it really rattled a lot of investor confidence. It even was so fast and furious for traders to deal with. But we didn't know if it was over-exaggerated, what the situation was. But then, from that, move, we saw, remember that reversal November 16th, from, it went as below as 505, went back above 522, and then gave you a really nice move back to, 594-ish, which was the 200-day, and then it turned lower. And from there, we expected some kind of digestion or a little bit of a pullback, but nobody really expected, or at least I didn't, the harsh move right back to the lows. So usually gyrations like this is institutional sellers trying to get out. It's always a red flag, just to be cautious. Okay, and at this particular point, you look at the long-term chart of Apple, you'll see here, some people are pointing to this head and shoulders pattern, which I've shown a few times too. This is your left shoulder, your head, your right shoulder, and this right here is very, very big support now. You have, last week's low of 518 as a point of reference, and you have 505, and then really below that, a close below that would probably give you a quick move down to 486, and then down to this 445 or 435 area. You go to your daily chart. The reason why I got a little concerned here is because look at this also, okay? Not saying it's game over, but this was that reversal you saw here. This was that 522 area. That was that red dog reversal. Here was some nice follow through to that. It held higher. Then right around here, you had a micro reversal. And then in 3 days, boom, it engulfed this entire area. So that's showing you the intense speed or even the force of this down move. And then, there was a signal here, okay? On 12.6, you had a reversal. It opened lower. It turned out to be a nice trade, potential higher low. Here was a low, higher low. First, something for the bulls to grab onto, and then boom, look what happened Friday. After the jobs number was up like $4 or $5, and it took that back so quickly, and then it engulfed almost this entire range, which is showing you that people are still fearful. So for me, I'm flat. I tried to take the trade here on this day, and I did sell some Friday and got stopped out as it went negative. So I'm going to look at it just as a trade. But I would say, again, be a bit fearful here. You have 1 point of reference in 530, then you have 518, 505. In order for it to get a bit more constructive, you want to see it get, take back at least half this day or close above this minor pivot here, because this pivot of 555 will now control this on the resistance side, and if it doesn't get taken out.
Google has had a rally in the stock more recently. It's above all of its moving averages, but it seems to get some pressure around the 50-day. What levels of resistance do you have your eye on?
Well, this too, it just shows you how you have to take trades and you have to know your time frame. During that November rally period, this one was a bit lethargic, but then it had a nice inside range where I know, short-term guys, took a nice 3-day trade, and it was acting a bit well. You look at the chart here, and you'll see that it's difficult. Okay, this was that the earnings. Look at that, boom! That was a surprise when it came out midday. Then it never took back half of this. Okay, so that showed you that this was in control of that direction. I had continuation to the downside. Boom! Here is your reversal. And then for me, I was like, it's getting a little interesting around here for a trade. You never know if it's just going to be a trade or if it's going to be more than that. This was, that first day we got involved for around 660-ish or so, and then I think off the charts we listed it above 675 right here. You had a little follow through to the moving average at 705, and now you have this inside range here where Friday was a strong day, okay, and Google closed on the lows. So to me and traders, it's a little bit of a, maybe if you were trailing it from here to get out, especially considering you did also have a small outside day right there where it went above the prior high and closed below it, and now here you have this day engulfing this range. So I'd be careful if it closes below 682. All of a sudden you have a high, lower high, another lower high, which again would show some weakness in high beta names, which is making some traders scratch their head.
Broadcom had a nice move on Thursday and Friday last week when they announced that they increased their fourth quarter sales forecast, given better than expected sales out of their mobile and wireless business. If you take a look at this stock, though, is there a trade here, or do we need to see more digestion now after that move?
I think now after the move, you need to see some digestion because, 3 days in a row up, I don't want to see anyone chase anything, especially considering the semis have not been a place to chase all year. You go to the chart of Broadcom, which is in the right sector, and I know, I think it's been mentioned before from Stephanie. She's liked the fundamentals there, and here is a little mini reversal, and from there it's moved up, and then finally gained a little speed right here. Took back, the moving averages, which is always constructive. So at this point, the bulls took the ball back, but again, the bears have a fresh set of downs coming into this resistance, so I would not be chasing right into here. So as long as this holds this area, this just say 33-ish, and goes sideways, maybe there'll be another trade to break above this resistance. But if it goes right through it, then just stick with the trade. I would like to see some consolidation first, and then a move through that resistance for better action.
Cisco's another one, has had a nice rally since mid-November, but what levels of resistance should we be watching as we look at this one?
This one has acted better since the last quarter, and that and even Oracle acted better. But there are times and places, and in mega cap, that's the last spot you want to chase for any type of momentum. And if you look at Cisco, when we talk about gaps, this had a gap up after earnings, and it gave you a calculated entry if you wanted one. You go to the chart here, and you'll see, look at where you had the earnings gap. That was right there, and then it did not fill it. That's always a sign that strength could continue. Then it flagged. So if this was your entry. Okay, then from here, you had a methodical move to the upside, a small outside day somewhat on Friday. So, if you were trailing it here, this was a spot that maybe some active guys would have taken off the table. So if it does lead to more weakness, I would say trying to come in and buy right around this 1866. That would be a decent area if you're a Cisco fan. But right now, it's had a nice move, little reversal on Friday. To me, that means it needs some digestion.
Amazon is taking a rest above its 8-day moving average after its recent rally. This has always been a best-in-breed trade here. Do you still like this one?
It's getting a little choppier up here,
Okay.
and I know a lot of guys went with this a little earlier, but then started even fading it because some of the other high beta names are so weak. So this stock frustrates a lot of different people on a lot of different levels because it has the the high PE. Earnings keep coming out, and people are like, why is it not falling apart? A lot of people love to be short this, but overall it's really close to the highs of the year. So you have to watch out for that. So take a look. You take a look at this chart. This, while other high beta names went below the 200-day, it held it. So that showed you a sign of strength. Here was a harsh descending channel right there that it broke above, and since then it hasn't really paused. It just kept continuing, and now I would say right here you have a small ascending channel to the upside. So if you were looking to try and short this, if weakness came in below 250, maybe you get a move back down to retest this 244 area. But right now it's been one of the chosen ones. So as long as it stays above this area, I would not fight it. And then we're a stone throw away from historic highs actually. So be careful just fading it. And as a buyer, I would just keep it tight because this is a tricky one.
Okay, let's do some quick hits. We'll start with AIG. Got a nice little pop on Friday after it announced plans to sell a controlling stake in its plane leasing business for $5 billion to a Chinese group. This is one Stephanie Link owns. What does the chart look like to you from a trader's perspective?
It looks like it's just slowly, methodically going up. I don't see a tight pattern, so my guys aren't really talking about it.
Okay, so let's look at McDonald's. It got an upgrade on Friday. Now, the analysts seem to be split still on this one despite the upgrade. Where do you see the stock? It's been rallying a little bit lately.
Yeah, it's been a lower level trade. People see it as a quality name, but it's not been quality this entire year. So you have to be careful with that kind of thing. You look at the chart here. If it was upgraded Friday, I wasn't here. It was upgraded and closed near the lows. So that's always a little bit shady in my book. You look at the size of the move from this reversal all the way up into the moving averages, upgraded, and they sold it. So to me, that says it needs time. I would say for this to actually be constructive and continue, I would think it needs to hold above this 87 and hold above this area which it just broke above. So right here, sometimes you do a retest. So if it retests this area and holds, that would be constructive for the name.
I know Netflix isn't a great one to look at, but on Friday, I think Reed Hastings got a Wells notice from the SEC about some comment he left on Facebook about the stock. What do you see in the chart?
What an interesting world we live in. He makes a comment on Facebook and you can get a Wells notice. Yeah. Anyway, I think it tried to go positive and it just didn't have enough power to go through 90. Overall, this has been a very erratic trade, but it could be very profitable if you're on the right side of it. If you take a look here at the chart, you will see, this was that first time I woke up and I remember it was so choppy right in this flag, and then we thought we'd have this powerful move above 82 and it really wasn't powerful. Then finally the Disney news came out. I know a lot of my guys are probably trying to buy it here to fill this gap, which it wasn't able to do. So at this point, I'd say as long as it stays above, what's this low here? The low is around 83. I do think that, it's in the cards for it to continue. So here's your halfway zone of this little channel here. And if it could get above 89.78 and close above it on an hourly basis, you should see a squeeze and it can get to 100. And real quickly, I don't think I have Facebook on there, but I was looking at it before. Facebook, which became a very nice targeted trade for us in this area into this gap. This is like the gap that got filled, that people want to see filled in Netflix, a similar trade, a similar chart. So remember here, we were all excited at around 23. We wanted to add a 24 for a move like this. So that's why this is on radars, radars, because they think that could happen here. Anyway, back to Facebook. If you recall, we had a nice move. You had an outside day, and then it has led to nothing. So at this point, I'm flat Facebook. And if it can get above, just say 28-ish, I think the guys that just tried to short it and are not using a plan, they can get squeezed, and the next move could be up, above 30. So I think Facebook has proven it could hold a little bit higher, so it's back on my radar. If I see some volume, I might go after it above 28 for just another additional trade.
And finally, we talked about retail earlier. Ross Stores is one Stephanie Link's looking at. She's always looking for value. This stock's trading below all of its key moving averages. She thinks there could be more upside. What do you think?
I think if you're looking for value, I'm not sure if this one has it, but it might have value, but it doesn't have momentum yet. So my traders are probably not going to be looking at this.
Okay. All right. Well, that's all we have time for today. Those are the stocks we're looking at, the sectors we're looking at, and the levels in the S&P 500 that we've got our eye on. Be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.